Welcome back, my friends. The news today is that ARM filed to go public. And majority owner Softbank aims to sell shares in chip designer it bought for $32 billion. ARM, which is owned by Softbank, filed on Monday to list on the Nasdaq. The UK-based chip designer is looking to go public during a historically slow period for US IPOs. Softbank agreed to acquire ARM for $32 billion in 2016. This comes at a time when the market for initial public offerings on Wall Street has been basically dead. What does it mean for big tech companies? What does it mean for the economy? And, what does it mean for the future of the United States? But, before we get into all of that, please press the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. And, before we continue, a word from the sponsor of this video. Today's sponsor is ProWorldNet.com. ProWorldNet.com is a job website specifically dedicated to licensed professions. Doctors, including any type of specialty. Nurses, and that includes all grades of nurses. Lawyers, regardless of area of legal focus. Teachers and professors, from kindergarten through graduate school. As well as any kind of job that requires a government license or certification. And ProWorld.net also includes short-term gig-type jobs as well. So, be sure to check out ProWorldNet.com if you are looking for a job or an employee. ARM, the chip designer owned by Japan's Softbank, filed for a Nasdaq listing on Monday, positioning itself to go public during a historically slow period for tech IPOs. The company wants to trade under the ticker symbol ARM. ARM reported $524 million in net income on $2.68 billion in revenue in its fiscal 2023, which ended in March, according to the filing. ARM's 2023 revenue was slightly down from the company's 2022 sales of $2.7 billion. The UK-based company filed confidentially for a listing in the US earlier this year after previously announcing it would go public in the US over the UK, dealing a blow to the London Stock Exchange. ARM is one of the most important chip companies. It sells licenses to an instruction set at the heart of nearly every mobile chip, and increasingly, PC and server chips as well. In recent years, it has aimed to sell more complete chip designs, which is more lucrative. ARM chips are made by companies including Amazon, Alphabet, AMD, Intel, Nvidia, Qualcomm, and Samsung, according to the filing. Its technology is also included in Apple's chips for iPhones. ARM said that its technology was included in over 30 billion chips shipped in its fiscal 2023. ARM typically takes a fee on every chip that is shipped using its technology. Softbank originally sought to sell ARM to chip giant Nvidia, but the deal faced major pushback from regulators, who raised concerns over competition and national security. Softbank took ARM private in 2016 in a deal valued at $32 billion. ARM did not provide a projected share price, so it's not yet possible to estimate its valuation. ARM, with just under 6,000 employees, plays a pivotal role in the world of consumer electronics, designing the architecture of chips that are found in 99% of all smartphones, making it a key provider of technology to Apple, Google, and Qualcomm. The company was founded in 1990 as a joint venture between several companies and Apple to create a low-power processor for battery-powered devices. It first went public in 1998, before being taken private in 2016 by Softbank. But the company is also facing headwinds from a slowdown in demand for products like smartphones, which has hit chip firms across the board. ARM's net sales fell 4.6% year-on-year in the second quarter, while the unit swung to a loss, according to Softbank's earnings release. Softbank's beleaguered Vision Fund, meanwhile, has racked up billions of dollars in losses of late due to tech bets that soured in a high-interest rate environment. In its filing, ARM made the case that its technology would be essential for AI applications, although it focuses on central processors, not the graphics processors that are required for creating big AI models. The CPU is vital in all AI systems, whether it is handling the AI workload entirely or in combination with a coprocessor, such as a GPU or an NPU, ARM said in the filing. ARM identified x86, the instruction set used in Intel and AMD processors, as well as RISC-V, an open-source instruction set backed by several big tech companies, as sources of competition. The company said that its three largest customers accounted for 44% of the company's total revenue. The company's largest customer, ARM China, an independent entity, accounted for 24% of sales. ARM also said that Qualcomm, which it is currently suing over a licensing violation, accounted for 11% of sales. ARM is poised to hit the market at a time when investors are flocking to next-generation semiconductors because of the demand spurred by artificial intelligence, most notably the soaring popularity of generative AI applications. NVIDIA, the chipmaker most at the heart of the generative AI boom, has seen its stock price triple this year. However, the tech IPO market has been largely dormant for the past 20 months, with no notable venture-backed deals since December 2021. Last October, Intel spun out self-driving car technology company Mobileye. That stock is up just 17% since its first day close. Some tech investors may be looking to ARM's offering as an indication of demand for new offerings. Grocery delivery company Instacart is among late-stage startups that are reportedly preparing to submit IPO paperwork to the SEC. ARM, Advanced Risk Machines, is a British semiconductor and software design company that specializes in designing and licensing intellectual property, IP, for digital processors, primarily for mobile and embedded computing devices. ARM's history dates back to the 1980s, and its evolution has significantly impacted the technology landscape. For those of you not familiar, ARM has quite a long and storied past. Here's a brief overview of ARM's history. ARM's origins can be traced back to Acorn Computers, a British computer company founded in 1978. In the mid-1980s, Acorn embarked on a project to design a new microprocessor architecture that would be more energy efficient and suitable for the emerging personal computer market. Acorn's engineers, including Sophie Wilson and Steve Ferber, developed the Reduced Instruction Set Computing (RISC) architecture, which focused on simplifying the instruction set of a microprocessor to improve efficiency and performance. In 1985, Acorn introduced the Acorn RISC Machine (ARM) architecture, which was designed to be power efficient and well suited for a wide range of computing devices, from desktop computers to embedded systems. In 1990, Acorn, along with Apple and VLSI Technology, co-founded ARM Limited as a separate entity to license the ARM architecture. The new company's goal was to license the ARM technology to other semiconductor manufacturers, enabling them to build their own ARM-based processors. ARM's business model was centered around licensing its processor designs and intellectual property to other companies rather than manufacturing its own chips. This approach allowed ARM to become an architecture-for-hire company, providing a wide range of partners the flexibility to integrate ARM's designs into their own products. ARM gained significant traction in the mobile computing space. As mobile phones and later smartphones became more sophisticated, energy efficiency became a critical factor. ARM's architecture was well suited for this, and its designs powered a wide array of mobile devices, including Apple's iPhone and various Android smartphones. In addition to mobile devices, ARM's architecture found its way into various embedded systems, such as automotive electronics, smart appliances, medical devices, and more. Its versatility and power efficiency made it an attractive choice for these applications. Over the years, ARM continued to evolve its architecture, introducing new generations of processor designs with improved performance, power efficiency, and feature sets. This evolution helped ARM maintain its dominance in the mobile and embedded markets. In 2016, ARM was acquired by Softbank Group, a Japanese multinational conglomerate, for $32 billion. This acquisition was intended to position ARM as a key player in the Internet of Things, IoT, market and future technology trends. ARM's influence in the technology industry continued to grow, with its architecture being used in various computing devices, including servers, laptops, and even data centers. Its designs also played a significant role in the development of supercomputers and high-performance computing clusters. ARM has also been involved in open-source initiatives, contributing to various software projects and collaborating with the open-source community to optimize software for ARM-based platforms. ARM remains a major player in the semiconductor industry, and its processor architecture continues to influence a wide range of computing devices. Please note that developments beyond that date are not covered in this overview. And, if you haven't noticed, the semiconductor business seems to be back to booming times. Intel reported second quarter earnings, showing a return to profitability after 2 straight quarters of losses and issuing a stronger than expected forecast. Intel CEO Pat Gelsinger said on a call with analysts the company still sees persistent weakness in all segments of its business through year-end, and that server chip sales won't recover until the fourth quarter. He also said that cloud companies were focusing more on securing graphics processors for artificial intelligence instead of Intel's central processors. David Zinsner, Intel's finance chief, said in a statement that part of the reason the report was stronger than expected was because of the progress the company has made towards slashing $3 billion in costs this year. Intel management has said the turnaround will take time and that the company is aiming to match TSMC's chip manufacturing prowess by 2026. That would enable it to bid to make the most advanced mobile processors for other companies, a strategy the company calls 5 nodes in 4 years. Intel said on Thursday that it remained on track to hit those goals. Prudent allocation of our owners' capital is important to enable our IDM 2.0 strategy and sustain our momentum as we rebuild our execution engine, Gelsinger said in a press release. Intel's stock has fallen nearly 60% from its 2021 high. Intel rival AMD, on the other hand, beat on both the top and the bottom lines. But, what do you think? Please leave us a comment below and hit the like button. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. Thank you for watching.